Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
I want to bring in Ellen Wald, president of Transversal Consulting, senior fellow at the Atlantic Council. She's also the author of Saudi Inc. It's the history of Saudi Arabia and Aramco. She joins us from Florida. Ellen, as Carol mentioned, lots of headlines coming from the White House right now. I won't rehash them, but what I want to hear from you is if that's enough to get these oil executives to make commitments to the tune of tens of billions of dollars in Venezuela.
I think we have to take these announcements with a bit of a grain of salt. I do think that oil executives are always excited to invest in areas where there's oil. But I do think that what they're saying, and I'm not sure if this is being communicated quite so strongly by the Trump administration, is that they need rule of law, they need political stability, and they need assurances that contracts will be honored, because a lot of these companies have been burned twice by Venezuela. And this is not the easiest oil to drill for. I mean, we're talking about very sludgy tar sand-like oil that requires, billions of dollars in upgraders just to transport it, to get it to the ships, to get it out of Venezuela. So this is a big investment. It's not like, a shale oil well out in the Permian. And so I do think if the White House is going to assure this, they're going to have to provide some kind of proof that, their investments are being made in good faith, that these contracts will be honored. And I think that if they can do this, and if they show that they can do this, then companies will be willing to invest, whether or not that oil is not going to hit the market in the next year or so. These are still projects that take a lot of time and money and effort. And so it's going to be quite a while until new oil, or at least oil from these investments, and until we can increase Venezuela's output and actually get that to the market, regardless of whether they start tomorrow or, next year. It's still going to take quite some time.
Weigh in on what we just heard from the Secretary of Energy. As the president said, he's an oil man with certainly an oil background, a former oil executive. He talked about record production in the U.S. And what he also talked about, Ellen, was the fact that even though the U.S. has less oil, its production is so much higher as a result of the technology that we have here and the investments that we've made. Talk a little bit about what we just heard from the Energy Secretary.
Yeah, I think he's exactly right. And he also highlighted our rule of law and the systems that we have in place that make it possible for businesses to, have security to make these kinds of investments, which are quite risky, and to develop the technology that we need to successfully and also environmentally consciously exploit these very important resources, which can and have raised our standard of living to very, incredible heights, particularly when you are comparing the situation to what's going on in Venezuela. And so I think he's exactly right. The question is, can they bring that to Venezuela? Can the U.S. actually provide assurances? And will they be able to do this? Because Venezuela's oil is still, as I mentioned, quite difficult to access, requires a lot of investment, and is quite expensive to produce. Now, it may be that U.S. companies and other companies can bring new technology that will lower those costs of production, which would be an incredible thing for Venezuela, for the people of Venezuela, and also for these oil companies. But whether they can be assured that they will have this security, I really think the administration has to deliver on this. And that's clearly the biggest point here.
Ellen, one of the things that I found interesting when the energy secretary was speaking, he was talking about record production of energy, oil here in the United States, the U.S. It's quite a success story, many would say, in terms of what they have done in terms of oil exploration and discovery and output. So do we need Venezuela? I'm trying to understand the relationship, and especially as we hear from President Trump basically saying that he will closely integrate the Venezuelan and U.S. economies. I just kind of don't understand how this all works and why it's even needed. Not for the people of Venezuela who need a better way forward. Yeah. Absolutely. But I'm just trying to understand.
Yeah, I think that there are two key points here. One is, yes, the incredible heights that we've been able to achieve with our production are incredibly admirable. But then one has to ask the question, do we really need more oil? Do we really need more oil from Venezuela? I think the answer is twofold. Technically, I think we're quite well supplied at the moment. However, Venezuelan oil could be very advantageous for the Trump administration in terms of replacing Russian oil. So if they want to put more pressure on Russia and kind of squeeze Russia's customer base, they can do that by replacing some of Russian oil with Venezuelan oil. So, for example, I know that a major Indian refiner that's been known for importing a lot of Russian oil in contravention of sanctions is inquiring about importing Venezuelan oil instead. So that could be a useful, I would say, foreign policy tool.
So I'm so glad you brought this up.
It's like this juncture.
It's like you're kind of reading what you're in two places at once.
You've been talking to China, maybe.
we're getting some headlines from the president right now. He says that he told China and Russia, we don't want them in Venezuela, but the president also saying China can buy all the oil they want from us, from the U.S. and from Venezuela. Is back to your comment that this could be a foreign policy tool. How do you read that?
Yeah, I mean, I think that it's the same thing, because any way that they can squeeze Russian oil out of the market is helpful leverage for Trump over Putin, because the best way to squeeze Putin and to get him, to come to that negotiating table and maybe to make some more compromises is if he feels that his revenue is being squeezed. So I do see it in that respect. In terms of the larger oil market, though, Venezuela's oil, I think, has the potential to play a very important and crucial role in later decades. We may not need it now, but overall investment in long-term projects is way down. And so all the indications are that, 2040 and beyond, we are going to need more oil. And Venezuela does have the potential to provide it.
So what we were talking to Kevin Crowley about of our Bloomberg News team based in Houston just a little earlier, because the question that we've had, Carol, that we've been talking about is, well, we're awash in oil right now. Oil's $60 to $64 a barrel. Is that a price that supports all this investment?
Yeah. So, Ellen, is that what this is about? And is that kind of a smart strategy going forward in terms of thinking much longer term? And I do think about, we often criticize the United States for being short term, 4 years to 4 years in terms of who's in the White House potentially. So is this kind of a smart long-term strategy that's been put out by President Trump? Whether or not you agree with the methods or the strategy or the specifics, does it make sense longer term?
I would say that it definitely makes sense in the longer term. And I believe a lot of the big oil companies are thinking that way because they think in much longer term blocks than, a typical 4-year term. So, in their minds, President Trump's term is basically over. I mean, in the terms that they think about and in terms of these long term projects. And so if they can get assurances that these things that these safeguards are going to continue past President Trump's term, then, the potential investments could make much more sense. But this idea that, suddenly, I think that they remain cautious because President Trump talks about, we're going to put so much more oil in the market and prices are going to go down to $50 a barrel. That's not helpful for them. And that doesn't give them confidence to invest either. So I do think that if he does have a grander foreign policy strategy and oil strategy, hopefully he's explained this to the oil executives and maybe managed to satisfy them, or perhaps he hasn't, and they still remain somewhat wary.
All right, Ellen, thank you so much. Dr. Ellen Wald, always appreciate your perspective in walking us through some of the headlines that we are getting out of this event. She is president of Transversal Consulting, senior fellow at the Atlantic Council, author of Saudi Inc.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
I want to bring in Rockford Whites, professor of practice and director of the Maritime Studies program at Tufts University's Fletcher School of Law and Diplomacy. He joins us from Medford, Massachusetts. Rocky, I do want to thank you for your patience as we heard from the president and oil executives and members of the president's cabinet over the last hour or so. We do thank you for sticking by. A lot of places we want to go with you, but I want to start with something the president said just at the end of what we heard him say. just now. And it was about making sure that the U.S. went to Venezuela so China and Russia didn't. Do you agree with him that had the U.S. not gone there, China or Russia would have gotten power through Venezuela?
So the short answer is yes, and no problem waiting. That was fascinating press conference. So happy to talk about a bunch of different things. The short answer is correct that both Russia and China were making inroads into Venezuela under the Maduro regime. That era ended on January 3rd.
Wow. Okay. Who was more likely to get control? And what did they want to do in Venezuela? Like, what would have they used? Not just Venezuelan assets, perhaps, for, but maybe Venezuela territory for?
Well, so I should clarify a little bit. So not really control, just be the sort of primary great power ally of Venezuela, which is a relatively small country, especially when you're comparing to China and Russia and the United States. So what they were looking for, so different things. Russia was looking for basing rights in the Americas for their Navy and their Air Force, also potentially some of the critical minerals that Venezuela is a very resource-rich country, not just with crude oil, but also with critical minerals and many, many other things. China was looking, has an interest in the oil, and also the critical minerals, and also perhaps long-term, perhaps basing rights for their Navy or Air Force. But they were really focused on economics. It was part of their Belt and Road Initiative. It sounds, listening to President Trump, that the commercial piece of it will continue with China, at least. I don't think there's that much commerce naturally happening between Russia and Venezuela, though Russia, of course, is under sanctions from the United States.
What do you make of, when the president says, and I'm looking for the headline here, that the United States will closely integrate the Venezuelan and U.S. economies? What exactly does that mean?
Well, so the honest answer is we'll see what it means. What I think it means is essentially a return to the past, in the sense that Venezuela and the United States were highly integrated economies for much of the 20th century, if not all of the 20th century. Essentially, once Chavez took power in 1999, things started to change. But the United States and the Venezuelan economies were very much integrated economically, particularly with their oil industry. Their oil, which President Trump actually correctly said is really very good for making asphalt. It's not the best oil. It's very expensive to refine. And we have refineries designed almost specifically to refine the very heavy crude oil that Venezuela produces. And those trade flows continued, actually, even under Chavez and Maduro, because of the economic interests. So I'm happy to elaborate on any of those.
I guess what I'm just trying to understand is, what's the key takeaway? Like, in some of the conversations we've had today, Professor Weitz, there's an understanding that we know we need more power and more energy in all its forms, whether it's carbon-based, whether it's renewable, whether it's nuclear. Mm-hmm. And maybe even though the world and the U.S. is awash in oil today, longer term, we need to develop this. So maybe this is a smart longer term strategy for the United States. So I'm wondering, is that what this is about? That mineral raw material grab that needs to be done, that the whole world kind of seems to be a part of. But I also do wonder about what this means geopolitically, mm-hmm. about President Trump when it comes to Russia and President Xi, Russia's president, to Putin, who he says he gets along with. But again, he seems to be sending them a very strong message. He also has he was questioned about Greenland and saying we can do it the easy way or the hard way, but basically we want Greenland. So I'm just trying to understand what the big takeaway is. What's the most important aspect of all this? We see all these oil executives, but I wonder if it's really something else.
Oh, okay. That's a very interesting question. Let me see if I can. So I think it's hard to come up with one key takeaway given the wide-ranging conversation that was that press conference. So why don't I try for three? So I think the three key takeaways from that press conference were, number one, The Trump administration is implementing its new national security strategy, which was issued in December, that essentially says the United States is going to become, or not become, but strengthen its position as the primary great power operating in the Americas. Box checked, because with Venezuela, a regime that was not friendly to the United States is now being transitioned to a more U.S. friendly regime, though that'll take that's going to be a hard challenge. That's number one. Number two, the other great powers are uncomfortable today. Russia's very uncomfortable. We can talk about the seizures of Russian tankers, dark fleet tankers. This, to me, is the second key takeaway, which is what has happened. It's related to Venezuela. So what President Putin has been trying to do to Zelensky in Ukraine, which is depose Zelensky and essentially become the great power where Ukraine is in its sphere of influence. They've been trying to do that for almost 4 years. It'll be 4 years. The anniversary, 4 years anniversary will be on February 24th, 2022. President Trump did that effort with Maduro in less than 4 hours. What that showed is, and this is the second key takeaway, is that the United States military is significantly stronger than the Russian military. And how that ripple effect came to the tankers is that the tanker that was seized just south of Iceland, the Marinera, it had tried to reflag as a Russian flag, and we can go into why that wouldn't work. But basically, it had a Navy escort, a Russian submarine escort, and it was still seized by the Coast Guard. So we could talk about that. But
so your point is, by doing what they did in Venezuela, has shown the military might of the United States. And
that's the second key takeaway. So I have one third one when you're ready.
So President Putin take heed, President Xi take heed, world take heed. And just quickly, what your third point is.
The third point is that we're still in, so Trump still almost can't help himself, continues talking about Denmark and Greenland as it is. So Denmark is part of North America, and I'm happy. I'm the Arctic lead at the Fletcher School, and I've spent a lot. I know the Greenlandic Prime Minister and Foreign Minister.
We love this. Go.
In October, so I have lots of opinions on that. But essentially, the third key takeaway is that there's going to be some kind of arrangement, or at least discussion. That's all public negotiation between the Danes and the Greenlanders in the United States.
Okay.
Unclear where that lands, but I have a lot of opinions on it if you're interested.
Well, we don't have much time, but the president did say on Greenland, we'll make a deal the easy way or the hard way. How is it going to go down in your view? And what is the easy way and what's the hard way? Just very briefly.
Yeah, okay, you got it. I'll be fast. So I said, so there's essentially three options for the United States, Greenland, and Denmark. So the preferred one, in my opinion, is a diplomatic solution where Greenland. So Greenland has been seeking some kind of independence from Denmark for a while. How that actually? So the way to think about it is, what is the position of Greenland in the 21st century? And the easy way is to solve that through kind of friendly diplomacy, because we actually are all friends. There's another option, which would be that the United States actually purchases Greenland like it purchased the U.S. Virgin Islands from Denmark about 100 years ago. And then the third option, which I think is completely unrealistic, would be a military acquisition of it. And I almost think it's almost not worth talking about. To quote Senator Kennedy, that's weapons grade stupid.
But what's likely? And you're saying something's going to happen, and the U.S. is going to increase its presence there and control over this. That's the bottom line. And what do you think is likely the path there?
All right, I'll quote a Greenlandic friend of mine. Here's what's going to happen. Trump will help make Greenland great again.
What does that mean?
And I can tell you what I think the scenario is.
Which is what?
That Greenland may actually become independent from Denmark, may join NATO may join the Arctic Council as the 9th member doesn't mean Denmark is not part of the Arctic Council. It still has the Faroe Islands, so it's still an Arctic nation. And essentially, Greenland positions itself as a new independent country for the 21st century with a security alliance with the United States, but still part of NATO, becomes formally part of the Arctic Council. And I think that's probably what would happen in the next year or two.
I feel like I just want to go, whoa, because it does feel like the world is being divvied up a little bit.
Yeah, and I think we're probably going to be calling on Rocky again in the near future. So,
Rocky, thank you so much.
Appreciate your time, Rocky.
Is there any other parts of the world, 30 seconds, that we should be watching? That there's something else?
Carol can't say goodbye.
I know, I can't say goodbye. Just 30 seconds. Is there anything else like in the world that we should be watching?
Keep an eye on Iran. Keep an eye on Iran. I think we might see a change of government in Iran in the next 30 days.
All right. Rocky White's professor of practice and director of the Maritime Studies program at Tufts University's Fletcher School of Law and Diplomacy. He's got his JD from Harvard Law as well. He joins us from Medford, Massachusetts.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Now, let's get to that monthly jobs report, and actually all of it with our next guest who's been sitting by quietly listening.
It kind of speaks to what's going on, Carol, when it's a Jobs Friday, and this is the first time we've mentioned the jobs report.
It's exactly right.
9 minutes in. Our next guest sees an economy that underscores a labor market stuck in low gear. And yet, as we've seen on the Bloomberg, traders see almost no chance of a rate cut following this morning's monthly jobs report. I want to dig into the data and the outlook. Gregory Daco's back with us, chief economist at EY Parthenon. He joins us here in the studio. It's the data that we've been counting down to all week. It turns out a report that you could have gotten an early peek at if you would have just been following the president on Truth Social. This is one way to increase engagement there, I guess. The weakness, it doesn't warrant another Fed cut?
I think it could warrant another rate cut. I think that what we are seeing is ongoing weakening in the labor market. And what's very interesting is that we're seeing conflicting cross currents when it comes to the labor market. On the one hand, we have labor supply that's come down dramatically for two reasons. One, demographics, that's a natural aging of the population. But two, and very importantly, significant immigration curbs. So you've got labor supply hit negatively quite significantly. But at the same time, labor demand is also softening. And I would argue labor demand has been softening faster than labor supply, leading to this gradual creep up in the unemployment rate. Nothing alarming yet, but there are warning signals here when we're seeing the unemployment rate gradually creep up over time.
You note that in 2025, in the notes you shared with us, the economy added just 584,000 jobs, a stark slowdown compared to the 2 million gained in 2024. So 2025, just about 500,000 jobs there. This is the weakest annual increase outside of recession since 2003. So are we headed toward a recession? Does anything there... Like, when does it become more problematic? What we seem to hear when we have conversations around this, that once the labor market starts to slow down, it starts to slow down pretty quickly.
That's the risk, right? And the negative story is indeed that we are seeing broad evidence of a labor market slowdown. Whether you look at job growth over the past 3 months, down 22,000 per month. Whether you look at job growth concentration, only half of the sectors in the private sector added jobs over the course of December. Or you look at the hiring rate at a 12-year low. All of these are indicators of very selective labor market demand. Does that mean a recession is on the horizon? Not necessarily, because the big element that we're seeing here that's very positive is productivity growth. Productivity growth has been increasing, has been accelerating.
Wait, is Alan Greenspan in the room?
Well, he might be, because what we are hearing from a lot of business leaders is that they're trying to do more with less. It's not AI yet, and that's actually a positive spin on the story.
Well, then what is it?
It's businesses that are coming out of an environment of high cost and high interest rates where they're trying to do more with less without incurring additional costs. And that means you have to be more efficient. You have to automate processes. You have to think about creative ways to put your money to work and focus on higher return on investment assets.
So is this a positive that it's not AI yet because that productivity boom is still to come in your view?
That's my positive spin on this story. It's that we are not yet seeing the benefits of AI in terms of productivity growth. We're only seeing it very selectively in the sectors that are high on the curve of adoption.
How do you know
AI.
we'll see it?
Yeah.
How do we know we'll see it?
How do you know we're going to see the productivity boom?
Well, that's the hope, essentially. I can't guarantee that.
But is there any data that you're seeing right now, or the way that at least early adopters are using this technology that show to you, okay, once adopted on a wide scale, we are going to see an increase in productivity?
Let's take a little bit of a step back in terms of the historical environment when it comes to technological revolutions. The key fundamental aspect of any technological revolution is having the proper investment, the proper infrastructure. That takes time. So building data centers, building semiconductors, ensuring that we have a proper cybersecurity environment, ensuring that corporates are adopting the technology and building the talent to manage that technology will ensure a solid foundation that should develop and drive stronger productivity growth. It's not a guarantee,
right?
But those fundamentals are essential in driving this technological revolution.
You know, we've talked to you about economic resiliency, the increasing dependence. This is something that you put out on those three narrow interconnected A pillars: affluent consumers, artificial intelligence fueled investment, which we're talking about, and asset price gains. It feels like that is coming together this year. How do you see that mix doing in your view, and what it means to U.S. economic resiliency? Do you feel like they're coming together to kind of shore up the economy?
In my opinion, AI is actually the largest positive global supply shock that we've seen in decades. We're hearing a lot of these negative supply shocks from trade and tariff policy and immigration and demographics that are weighing on potential growth and lifting inflation. AI is actually the key support to economic activity because it lifts your potential output, it allows you to do more with less, but it also eases inflationary pressures, which is a key issue around affordability right now.
All right, do more with less. Does that at some point mean do more with less workers too?
Potentially, but let's not forget that we are in an environment where demographics are working against us. Populations around the world are rapidly aging. 2/3 of the population in the world live in countries where the fertility rate is below 2.1 child per woman. That means that populations are shrinking and that we have to think about how the talent will adapt to serve an environment where demographics are weighing against us.
One way the United States has challenged this demographic narrative over the last few decades has been immigration.
Yeah.
That spigot has been turned off.
It's a huge constraint.
Is it a drag?
The CBO, the Congressional Budget Office, has population estimates, and it estimates that births will be lower than deaths by 2031. So we'll have a natural shrinking of the U.S. population by 2030, 2031. That's because immigration has been reduced quite significantly. The key driver of working age population growth in the U.S. has been immigration. Without immigration, we're at risk of seeing weaker working age population, and that means that the so-called break-even rate for payrolls, which is the rate at which the unemployment rate stays constant, is falling lower and lower and lower, and we may soon be in an environment where we actually have a negative break-even rate, and that if we're seeing slower job growth, it's actually okay because we're in this environment where the break-even rate, the natural rate of working age population growth is much lower.
Yeah, I do feel like there's other countries we've done stories about, well, okay, immigrants, come on into our country, we'll welcome you because they see the importance of having those workers in terms of growth. One last question. We've got about a minute left here, Greg. We are spending so much time focusing on what's coming out of the White House and different policies, whether it's on housing, whether it's on defense stocks, you name it, continuation in terms of tariff policies. How is any of it, or any of these specific policies, are you taking note of and factoring into your economic forecast for the United States?
You have to take everything into account. That's the difficult part, Carol. We have to take all of the policy shifts that are occurring into consideration. Think about the potential ruling on emergency tariffs, for instance.
This is a big deal, right?
It's a huge deal. It could actually lower the effective tariff rate on U.S. imports from 16.8% to 9%, a significant easing. Now, what happens after that? Are there new tariffs put in place? And how do these affect imports from different companies in the U.S.? So you really have to factor everything: trade, industrial policy, immigration shifts, demographic shifts, and AI.
Is energy policy and getting more oil from Venezuela something going to change your thoughts here in terms of inflation? And just got about 15 seconds.
It could very well, but we have to see how much investment is needed to actually get the oil out of the ground. Under the ground, the story is very positive. Over the ground, much less so.
Really well said. Have a great weekend. Happy New Year.
You as well. Happy New Year.
Great to have you back. Gregory Dacko, he is chief economist at EY, joining us here.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Our next guest has a front seat to the housing market. Katie Hubbard is back with us. She's Executive Vice President of Capital Markets at the privately owned asset and real estate investment company Walton Global. Got close to $4.5 billion of land under management, more than 90,000 acres under management in the U.S. They operate in retail, industrial, and commercial sectors. She joins us from Scottsdale, Arizona. Katie, we've been eager to talk to you this week as we've heard from the president about his moves to make housing more affordable. What he said earlier this week about single-family homes being purchased by institutional investors. The latest moves today, as Carol mentioned, from U.S. Commerce Secretary Howard Lutnick. And then, of course, the moves with mortgage-backed securities to try to get mortgage rates lower. Just taken together, does this move the needle in the U.S. on housing affordability?
It's definitely a step in the right direction, and it's going to improve sentiment, which is going to help, but it's not going to drastically fix things. And the idea that institutional investors are blocking home ownership is a myth. Institutional investors own less than 3% of single-family rental market. That's 0.6% of the entire housing market in a $50 trillion market. Blocking institutional investors is not going to move the needle. And in fact, it actually could hinder the issue, which is a supply issue.
So
that's it. That's everything. All
right, Katie, great to see you. Have a great weekend.
She just gave us all the answers.
All right, we're done. No, and even the idea of buying more mortgage bonds, does that do anything, or is that just a little thing?
So again, it's a step in the right direction, but $200 billion in MBS and a $9 trillion MBS market could move it 10 to 30 basis points on the 30-year fixed in the near term, which is probably already being priced in right now. And then long term, over the next year or so, it could bring rates down 50 to 100 basis points. But we're talking going from, if you're at 6.08 today on the 30-year fixed, even if you were at 6.5, dropping a full 100 basis points isn't going to move the mortgage payment enough. And that's what the issue is affordability. So if you take a $415,000 home, that's the median home price for new homes right now, the mortgage payment only drops $200 a month. The issue is that in 2019, that same house was $283,000. So home prices have gone up 80%. And so they're just not affordable anymore. And mortgage rates at that time were 4.1%. So now the mortgage on that same house just in 2019 is $2,500 versus $1,250. So dropping rates 10 to 30 basis points in the near term is, like I said, going in the right direction, but it's not going to be a major needle mover.
Listen, we love talking to you. You understand land acquisition, what the home builders are up to. I mean, what are you hearing from home builders, why they aren't buying more homes in the United States? And I know when we talk to you, building home, real estate's regional, right? There's rules, there's regulations, there's zoning, there's lots of things that come into it. So is there a clear takeaway of why aren't home builders building more homes in the United States right now?
Yes, and I'm glad you mentioned that, because what the Fed can do if they want to improve America's ability to purchase more homes is we need to increase supply. So what they can do specifically is help with reform and make it easier for permitting, entitlements, impact fees. All of this regulation adds up to 20% of the home price in markets that aren't as regulated, and in heavily regulated markets, it can make up 40% of the home price just because of these extra regulations, which the government comes and steps in. It adds time, soft costs, carrying costs, years of delays, and over $1 million just to get projects off the ground. And so that's feeding into the ultimate home price for homeowners. The government needs to help with densities and zoning reform in order to make it faster and easier for developers. That will increase the supply, and that's what we need.
Can the federal government help with density reform? This is a local issue. This is an issue that is sometimes put up to voters in some cases.
Exactly. And it is a local issue. And so the places that are more pro-development, that's where houses are more affordable. And because it is a more local issue, we need reform at the local level, which the government, the federal government has the ability to pull some levers to pressure the local governments. And so that is one thing that they could do.
Yeah, I mean, the other thing is, Katie, we often hear from, or not often, but we've had guests on who say, it's really simple. We need to also pay people more money. I mean, if you've gotten things that are costing more, that if you want to make things more affordable, pay people more money. I don't know. Does that make sense? Does that factor in your view?
Well, I mean, at Walton, we believe in free markets and looking at the data-driven housing policy, and so we just really need to increase supply, and then it will work itself out because the money's coming from somewhere.
So on the supply side of things, if we look at this as the local and regional issue that it is, Katie, where in the country are homes needed the most and the quickest?
Well, definitely where jobs are. I mean, there are some places that have the highest regulation. You're looking like Massachusetts and New York, and it makes it difficult for developers to build homes in those markets where people do want to be, but they just simply can't afford the home. So places like Houston that has very low regulated zoning laws, developers are able to go in there and build houses for much more affordable because you can be off the ground in 6 months, where it can take literally more than 5 years to get land zoned and approved in places that are highly regulated like the coastal cities.
Yeah, it's interesting. And the other thing is, we've been watching the sector, and it's been whipsawed based on what's coming out of the White House in terms of the home builders in particular. We've got quite a rally, but we did see, some selling earlier in the week based on the social media post out of the president when it comes to housing. Does it make sense at all for investors to be thinking about buying? I know, that's not necessarily your world, but there's nothing that's really changed that maybe has fundamentally or financially changed the outlook for these names. And just quickly.
Yeah, and I think it's the good news that the government wants more affordability and more housing for the American people. The fundamentals are there. Demand is off the charts. So the long-term fundamentals from the investment side are there, and that I would say is positive. There's really nothing that's going to keep demand from being there long-term. If we can fix the supply side, then I think long-term you're in a good spot.
All right. Thank you so much, Katie. Glad we could get some time with you. Katie Hubbard, she's Executive VP of Capital Markets of the privately owned asset and real estate investment company. It is Walton Global.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.